Good morning, everyone. It is Friday, July 23rd, and this is Nadex Morning Analysis. I am Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. Brian and I are going to take a look at some hot spots in the markets for today. Before we jump into that, I need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what do we got going on today? And really, kind of what we're looking at, it's a little quiet on the news front. We are setting up a bit for a feel good Friday. So, today, I think what we're going to do is we're just going to take a look at the US equity indexes, all looking to open green across the board, about 0.5% apiece. But what's more interesting, if you take a look at the chart here, is this trading week. And it was quite a trading week on Monday. I mean, we completely got hammered and we've made a full recovery. We've gone full cycle, in fact, now to the tune where we are now butting up. We've up against highs, while the S&P 500 approaching all-time highs. The Nasdaq also approaching all-time highs. The Dow coming back, not at all-time highs, but certainly. If I bring the Dow up, a lot of times this will happen just because people want to see it, touch it, but we're getting close to that 35,000 level again. And I know that I believe the all-time high was 36. But Dow certainly, again, all these charts look almost identical if you take a look at what happened over the week. Hammer, and then it's, if, I'll let Brian elaborate, but it's, this is not a parabolic, it was certainly a parabolic move, and we've made the full recovery. It wasn't a parabolic recovery, but it's almost along those lines. I know Brian talks quite a bit about that. So and then the one thing I would like to point out is, just as a reminder, I know Brian will get into it, is at 9:45 a.m. this morning, there is an economic number coming out. It's the manufacturing Purchasing Managers Index, the PMI, and it'll give us a glimpse into whether manufacturing has continued to expand or if it's contracting at all. So if we want to get a measure on the health of the manufacturing sector, 9:45 a.m. Eastern, that actually might impact the Dow the most. I think it's got the most manufacturing heavy index. But Brian, let's jump into it and just take a look at some technical levels across the board in the indices.
Yeah, I mean, right now, looking in the overnight, kind of seeing what's moving, what's not moving. About the only thing that's really consistent right now is the fact that the yen is weakening. And we saw a lot of yen strength earlier in the week, but now pretty much every pair that the yen is associated with is going up. Dollar yen, Aussie yen, Euro yen, pound yen. Not that they're exploding, but I mean, the dollar yen up 40 is a decent amount for that pair, but the pound yen being up 44 is really not that much, and the Aussie yen is not really up a ton either. So right now in the overnight, it was, I would say, for lack of a better word, it's mixed data. Retail sales came in good, right? 0.5% growth. It was supposed to be negative for the pound early on, but then when we got the manufacturing PMI and everything, we got some red numbers, and still still above 50, so expansion, but obviously lower than what they had expected in the past by kind of a significant amount. So it was kind of like one good, one bad, washed everything out. We had bad French data, but then the German data came in much better than expected. And again, I think the question here is really what type of effect is all the flooding and the issues that they're having now going to be. And then I would say the European overall, just the straight European data for the entire European Union, basically came in flat. It was slightly higher in flash services, but that's it. And then we had the Canadian data come in, and we talked about this one, maybe not being positive, but not being as bad. And it was split. We had one red, one green. I would say the core retail sales being a little bit negative wasn't helpful, but again, having it be, retail sales be not as bad as what they had thought, they're moving in the right direction. But again, a split number, people don't know what to do with that. So it all is going to come down to the U.S. data today. And again, when you have this split data, there's no real kind of major driving factor out there. And even when you look at the, kind of the hottest news today, We have some, some of it's, talking about private sector growth in the UK, and retail sales was up. So it was like negative and then positive, and then dollar set for the second week of gains as focus turns towards the Fed. Again, inflation, inflation, inflation. There was a couple other ones in here talking about inflation here. Transitory or not, inflation is coming for the consumer. It
And
is
we're
what it
seeing that
is.
in the energies too, right?
Yeah, I mean, and that's the thing. Yeah, it's mostly energy driven. And again, it's a very difficult situation because the people that are hurting the most from COVID are the ones that are also affected the most by inflation. So it's
yeah.
great that, it's supposedly transitory, but the people that need it the most, the people that we can't find, the people that are not accepting jobs and that are unhappy with their jobs right now. I don't know if you saw the Burger King store that changed the sign and said, "We're done. Sorry, everybody," and the whole store quit because of the conditions that they have to deal with. It's not the only it's not the only place to see that. But again, that's transitory. Not nothing's being done. We're still squabbling about things, and the people that need the most are not getting the help. So, that's what's going to affect a lot of our other numbers, a lot of retail sales, and then again, we had the billionaires going to space. So, as far as where the market's moving, I would say today's really kind of set up perfect for one of those feel good Fridays. Everything got hammered in the beginning of the week. It was Monday. It was all about, oh, Delta, 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 inflation, inflation, inflation. And by Wednesday, people were like, whatever, nothing's changing. And then the market was really just, yep, let's just go, and it just continued to move and move and move and move. And nothing's really changed in 5 days. We don't have a cure. We don't have world peace. We all don't live tax free. So, where we are right now, prices push back up. This is a level where sellers have stepped in the past. It was kind of a previous high right in that area. We talked about 43, 43, 83, 50 being an area where if we could punch through, that's kind of like, new territory where we don't really have sellers really kind of stepping in. And, we've mentioned 4,400 is one of those big kind of, again, double zero, new big number. We're 20 points away. If we look at the ATR for the ES, 1 day's worth of movement, the average, we're at 44. It needs to do half of an ATR right now to be able to get up there into that level. So
wouldn't that be something?
Yeah, I mean 4,400 at the end with we're close. We're right there. We've been talking about it, and again, we're seeing a little bit of a pullback now. And again, this is a 15-minute chart. I wouldn't say anything is really spectacular on this one. I mean, I'd say that there is a little bit of basing in this level. Maybe actually if we put it down just in that level right there, make it bigger so you guys can see it. We had this level of basing. We kind of bounced it here and then touched it and took off. And we're kind of pulling back down. That's, I would say right now the market is kind of lost. I mean, it is green. That's always good. Retail traders see green. They want to start buying. But I think, just the fact that, again, that we are so close, I think puts us in range of, I just moved that. I wasn't supposed to. There. I think it's a positive sign. With any big, lack of negativity in news releases this morning, I think this one goes. NQ is kind of in the same situation, right? We talked about these are the three major levels. We ended up breaking through yesterday. That 14.95, 50. 15,000 was the next one, and again, we just broke through the 15,000. We kind of touched it yesterday and have now stabilized a little bit above, and kind of the same thing on a 15-minute chart. We had an area of basing. We've kind of pulled back before the open. So this one is also primed to find more buyers to help out. And again, we know that there's more below as well.
I love that they're all at these. I mean, it's just fascinating how they end up at these double zero levels.
Yeah, I mean, this basing here, this test was at 14,900, double zero, 15,000. Again, this is a triple zero. And then we have another one sitting right higher where we have the 50s. So again, I would say, with 15,000 being here today, I would say with it pulling back, it's also not bad. I think 15,050 could be in the radar today as being the next big level that we need to hit that the news can talk about. But I think of the big three, I mean, the Dow is up the most.
Oh wait, before we do that, I just want to jump over to the Nasdaq real quickly. I want to take a look at something because I hadn't had a chance to take a look. We always talk about the binary options. And I mean, there's certainly binary options, one way to play that. I just wanted to see in the Nasdaq. Let's just take a quick peek. I just wanted to see what we've got in call spreads and knockouts. And I wish I had brought these up just before.
The call spread of the week was the dollar yen though. That was the call spread of the week.
The call spreads.
Yeah, we talked about that Tuesday, and it's still going higher.
Yeah, isn't that crazy? there are some call spreads in here. Where you're near or below the floor that could be interesting. For the day, if you wanted to play it that way, where you're not knocked out. Now these are all going the wrong way, but there are some call spreads in here that could be kind of interesting. There's still a bit of premium in them because it is so early in the day. But if you were looking for a feel good Friday and you wanted to go long, clearly binary options one way to play it. A call spread could potentially be another. I don't know. Let me just take a quick peek at the knockouts too, and it's interesting. I mean, you got to take a peek across and see what's going on in each one of these. The Let's see, and for the knockouts, I mean, we are pretty close to this floor. Did I clicked on the wrong one? That's what I wanted.
Hey, at least you're not in oil. If it was Monday, you'd be on oil right now, trying to explain trying to explain the NQ.
Yeah, so it's actually interesting. There are, I mean, the knockouts and the call spreads, depending upon what you're looking to do, might be an interesting way to play a feel good Friday. Again, you might want to wait and see what happens as U.S. retail traders, come into the open. But there are the binary options. Clearly, people love the binary options. But with the way things have been going, if we're going to see a melt up, there might be a more interesting way to play that, potentially with either knockouts or call spreads.
And again, the one that you're talking about right now that you're looking at is not necessarily bad because it's right below the level of basing that we have highlighted. So, if people are looking for a limited risk or, kind of a smaller risk entry, playing knockouts, if that's the one they want to today, that's not a bad one because if it does break through that level of basing there, then it's most likely going to go lower. And again, that's trading. You have to have some risk in there. But as far as acceptable level of risk from that base, how far can it move? I mean, if you look at that chart right now, you can see how close it is to the ceiling, to the floor. Yep. Again, you're going to take that risk, but look at what the potential gain is on the other side of it. It's definitely, well above the 1 to 3. So, the risk to reward ratio trade matches up. And again, this is not a trade recommendation. This is just in general. I'm just looking at the chart. And if any knockout ever pops up like that, and you see that level of basing there, those are the type of trades that, I personally look for. Now, if it does break through that level, there is a bit of a racetrack back to the downside. And again, in this case, we know that it's down at 14,900, but that's trading. It's not called shopping. It's called trading. There's risk in every single trade that you take.
And if you ever wanted to turn it over, and try to catch hey, you're wrong and it's going down, you could always turn the cards over, find a different call spread, and a different knockout and go the other way.
Right. And remember, markets are buyers and sellers. For the market to exist, you have to have some people that want to go long, and for somebody to buy something, somebody else has to be willing to sell it. And if you want to sell it, same thing. Someone has to be, willing to buy it from you. So that's why it's always interesting when you see, you think about, if and again, I flip over the Dow. The Dow is within range of 35,000. For you to be able to purchase it at 35,000, right? This is where we are right now. We finally broke through again. 1 hit, 2 hit, 3 hit, 4 is where we based and we ground through. So again, we expected it to break after those hits. We are within 120 points of hitting 35,000 in the Dow. The daily ATR for this one is 397. Let's cut it in half, and we'll just say that 200. Right? We're 100. We're 120 points away. So we are well within range of basically one third of what its daily ATR is to hit that 35,000. For you to buy it at 35,000, someone has to be willing to sell it at 35,000. Otherwise, there's no way to acquire it. So it's one of those things that you need buyers and sellers on both sides. So why one person may like it long, another person may like it short. I know a lot of traders that I personally work with and mentor. One of the common things that I always hear is, it's like the market knows. Every time I get in, it goes right to the downside. And that's the exact thing. Somebody wanted to sell it, but somebody had to buy it. You are just the guy buying it, And if it happens to you every time, then have your wife literally take every position against you so you guys make money. And then just cut your stop loss. That's what I tell them.
You'll end up even in the end of the day. Yep. That's actually really funny.
She's always gonna be right. So this way she can say you were wrong. It's like, yeah, taking the second. So as far as YM goes, I don't want to take too much time for people today. It's almost 9 o'clock. YM, again, it's the strongest of the three right now. It's up the most. It's up just over 0.5%. That's kind of doing the same thing on the 15-minute. It's pulling back a little bit, but I would say, if we are going to go with that Feel Good Friday today, it's got the most kind of power so far. It's the strongest of the three. If that number at 9:45 today, the manufacturing, PMI, and services all come in good, or at least good is in the sense that they are going to be positive for the overall indice today. Again, 35,000. I mean, how great of a news story is that on a Friday to be able to say we just cracked 35,000 in the Dow?
Yeah.
And again, that's how the market works. Again, lower volume because it's summer. We're in prime vacation time right now. Those are all the things that you look for.
So, and I was just gonna say, I didn't see a knockout for the Dow that looked all that compelling because just the way the knockouts are lining up. But there are some call spreads that might be kind of interesting. Now, the interesting thing about the call spread, yes, there's going to be a little bit of a premium, but if it were to pull back, you hit that floor, you're not knocked out. But again, if you're looking forward to push higher to that 35,000 range and just try to get up there to that 35,000 range, there's potential. There's some ideas. There's some ideas where you might want to take a peek outside of simply doing them with the binary options. With that, Brian, is there anything else you want to throw out there? Do you want to just do a quick little peek of gold before we call it a day here or call it a week?
Yeah, I would say, I mean, like oil is basically flat. I mean, talk about a little situation. We're in a very, very little situation. It's the exact same price it was when it closed yesterday at 230. We haven't really moved. It's just been a grinder. So again, if you like those little big scenarios, not that there's a lot of driving news today, but the little big scenario, we are high on the curve with a little that could signify a move down to at least, $70.50. Gold has literally been chopping back and forth. And as we've seen, this has been the trend this week. Europeans send it down, U.S. session brings it back up. Europeans send it down, comes back up. European session send it down, and then right around 8:30 is where we're at right now. It's being pushed forward, but then kind of gets stuck. Once it pushes up, it gets stuck. So if anything, I would say maybe a grind a little bit lower. And again, we'll have to readjust our level for next week because now we've hit the 1795 a number of times and finally gotten a breach through it. So we'll have to find another good buying opportunity for next week. That's kind of it, I would say, with it pushing down. And then I mentioned, again, it's the last one of the week. This is how this one worked out. This is that call spread that we talked about. And again, It did not breach through the bottom, but you guys can see this one came out on the 19th. So Monday, we talked about this call spread. When we talk about, holding things for the week, this one is up 153 pips for the week. And when we talked about the actual level of risk associated with it, from where, again, it never actually breached. And if it did, it really didn't matter. But we were 5 pips from that floor. So again, for those of you that like some of the longer term swing trading things out there, again, there's plenty out there. And again, this is a week-long trade that will expire today. I mean, at this point, again, you're up 150 off of like what, $5, $10 worth of risk, even if it was $20 risk, $25 risk because of the premium for the whole week. Risking $25 to close it out for $150. Remember, these close a little bit differently. They're more associated than a binary would be. That's a great, great, great risk to reward ratio and return on your investment. So again, don't think that Nadex is only a day trading kind of small duration type asset because we talk about the small intraday stuff. This is something that some of you traders out there that like swings. If you can get something cheap on Monday, it's a great way to do it. So we've seen this kind of happen again and again and again.
Excellent. All right. With that, any questions for Nadex, please email us customerservice@nadex.com. Questions for Brian, you can certainly hit him up at support@keeptradingsimple.com. And quite an interesting week. Really what we were looking at today, all those U.S. equity indices making a recovery, punching up towards highs, all-time highs in a couple of them, recent highs certainly in the Dow. Remember, manufacturing PMI this morning, 9:45 a.m. Eastern. Keep your eye on that. You know where to go to look for that. You can go on dailyfx.com and take a look at the calendars. You could track where that number comes in when it's released at 9:45 a.m. Eastern. And with that, I want to wish everyone good luck in the markets. Brian and I will catch you again on Monday morning. Thanks, everyone.